It's pretty clever, but like many things, it's not something I take complete claim to. This falls into the category of the Pareto principle, or what people commonly know as the 80-20 principle. You've heard of that before? 80-20? In the world of business credit, I recommend, just fast, and loose guidelines, generalizations, I recommend that the money you take off of a business line of credit, I recommend that you spend about 80% of it on business activity, whatever that may be. So in an example where you drew $100,000 cash off of the various business lines of credit you had, you would spend about $80,000 of that on the business activity. And I recommend that you set aside, put in any account you have access to, 20% of that money, which of course would represent $20,000. So, and again, if these numbers are too small for you or too big for you, change them to your business needs. But just know that you should be trying to follow, in my opinion, this general guideline. This 20% of money, you're now doing what's called seasoning. And again, I don't care what kind of account you put it in, just as long as you have access to it. This seasoned money does a number of powerful things. First of all, when you go and approach different lenders and bankers, what's the old joke? Who does a bank lend money to? Somebody who looks like they don't need any, right? That's the common joke. Well, when you've got money sitting in an account that's your account, you now look very powerful, you look very lendable. So your likelihood of getting much better deals and better terms increases dramatically when you've got cash reserves seasoning like this. So you're increasing your business's credibility. In many cases, you increase your own personal credibility. You can negotiate lower rates because you look like you don't need the money so much. And as the normal payments come, I said earlier, these are, for the most part, these are revolving lines of credit, meaning you can pay them all off at any point with no penalty. You can make partial payments. You can reach in, you can draw some of that money back out whenever you want, or you can just go along and make the minimum payment every month, which is very simply the way I do it in almost all of my businesses. Well, in a startup phase, where does that money come from to begin to pay back the line of credit? You're in growth, you're in startup. Well, this is one of the really fantastic ways that you can get money to repay the payments when they come due. You can get it out of this money that's sitting there seasoned. I've created business plans where this money will last 3, 4, sometimes even 5 years while you're getting up and running, because the minimum payments are so small. And of course, when the business starts to run properly, it creates cash flow, of course, in every well-thought-out business. That money then begins to be used to pay down this business line of credit. So it really is a great tool on a whole bunch of different levels. You set some of the money aside to run your business and startup phase. You look a lot better. Your chances and odds of getting more and more of the things you want dramatically increase. It is using their money to pay them back and to strengthen your own credibility and position. That's simply put what seasoning money is. Seasoning money does not mean you need to start the game out with $10,000 of your own cash and put it into account to be able to get business credit. If you had $10,000 cash, you'd probably already be able to get a minimal business started. So you don't need any of your own money. That money that you're seasoning is coming off of a cash-based business line of credit. Now, in the business credit world, the rates are lower. I mean, we help our clients get the best rates possible. There are thousands of different resources, so I don't